there was a whole list of hedge funds and their performances that came out. Surprisingly, vast majority of hedge funds did not even outperform the S&P 500. In fact, they were way lower than S&P 500. And most actually vastly underperformed, of course, compared to Bitcoin. So had you just bought Bitcoin, your performance would have been better than almost 99% of hedge funds out there.
So hi everyone, we're in for a very special treat today. We have George Tung from CryptosRUs joining us in the show. George, it's such an honor to have you and to hear from your insights about the market.
Marvin, thanks for having me on.
I really believe that you're one of the voices of reason in a market that's filled with there's a lot of fear, uncertainty, doubt. There's a lot also of excitement. But before we go to the nitty-gritty of the markets, I wanna ask something very, very interesting, so that at least for people who don't know you yet, that watch this channel, get a glimpse of who you are. You're very, very good in what you do. You're a good investor as well. I just want to ask this. If there's a secret sauce, or what has made you a successful investor, what has made you George right now, what would it be if you would audit the way you would analyze things or you would invest? What has been very, very consistent to lead up to where you are right now?
Well, I haven't always been a good investor, but one thing that I've learned over the years is to really just have patience. I think most people coming into this space, and it's not just crypto, but equities as well. I think most people come in, they hear about it, they read the news, they may have friends or family telling them, oh, everything's going up. So people tend to come in, they FOMO in, they want to make quick money, but they don't realize usually when everyone is talking about something, that's usually towards the top and things are going to come down. But because they're not disciplined and because their timeline is maybe a little bit too short, when things do get rough or when the markets do go down, they fail to take advantage of the bottom. So that's one thing I've learned over the years, is to have patience, because like many others I just described, me myself, I was the same way. You know, in college, I think that was when during the dot-com bubble was happening in the US. Everyone was making money left and right with dot-com stocks until they didn't and crashed down, right? And I got in toward the tail end, made some money, and then boom, all the way down. And, you know, same thing in 2008 with the housing bubble, same thing. And then with crypto, you know, I've lived through a couple cycles too. And, you know, that's the biggest thing I can tell your audience and basically share, is to have patience, because markets will move up and down. When they move up, it's tremendous. When they move down, not so much. But the best way to think about it is, well, if things do go down, it's an opportunity for you to be able to dollar cost average down or buy low. So that's how you truly make money. You make money by buying things low and selling high, not the opposite, which is what most people do, is buy high and then end up panic selling low. That's not what you want to do. So that's the one thing I've learned over the years.
Great answer. I just want to mine more on that. I believe patience goes both ways. One is patience not to really buy when everything is so expensive and everything is so high, and patience also that not to panic when everything is low. In the midst of that, say you are in a position and it has gone up, but it's not yet at the point where you really, really believe it's supposed to go. What do you do to convince yourself also to hold on to your position? Because it's different when you try to simulate things, but when emotions are there, money's there, how do you do it? I think that's where a lot of people make mistakes. And second is when it's down also, what do you do also to get into the trenches, thinking that what if it goes lower, or what if this is I DC at this particular portion and grab a bigger portion of the slice.
When you're living in a moment, no one could really say for sure this is the bottom or the top. Everyone is speculating, even Wall Street. Don't let Wall Street fool you into thinking just because they're making moves that they actually know what they're doing. In fact, if you look at how hedge funds have performed in 2021, at least this is for the US, there was a whole list of hedge funds and their performances that came out. Surprisingly, vast majority of hedge funds did not even outperform the S&P 500. In fact, they were way lower than S&P 500, and most actually vastly underperformed, of course, compared to Bitcoin. So had you just bought Bitcoin, your performance would have been better than almost 99% of hedge funds out there. You can't just see, okay, if Wall Street's selling, I should just follow them. You have to be somewhat smarter than that. You need to pay attention and kind of do your own homework and analysis and pay attention to what's going on. Media tends to over exaggerate. They'll sell you really negative stories, and they'll continue to do so forever. But you have to pay attention to, well, you know, what's really going on with the economy, with inflation, with the macro stuff we've been hearing about, right? Are things really getting worse, or are they starting to improve? You know, stuff like that. You have to pay attention. It's not for everyone, obviously, because I stream every day. I look at this and pay attention to data every single day. But for a normal investor, if they're in it already and they're down and they're wondering if it's gonna go lower, well, you gotta put in some time and do your research. Just like anything else out there, it doesn't matter if you're, you know, trying to stay fit or losing weight or taking up new hobby. You need to put time in there. And it's the same thing with investing. You can't just come in and say, okay, I'm gonna throw down 5, 10,000 or whatever, and now it's down 50%. Okay, I'm just gonna withdraw and leave the market forever, right? That's the surest way to lose money. But if you're, you know, in the trenches and you want to know, well, should I keep holding? Should I put more money in? You know, you need to really kind of just dig in and pay attention to everything that's going on and make that determination for yourself, right? So that's what I would say.
Got it. I want to nitpick, or at least grab a piece of how you think. I want to go back to November 2021. Bitcoin obviously at that time was at its highest, 69,000. Ethereum 4,800, BNB 600, 700. What was your frame of mind at that particular moment? Were you more aggressive? Were you more conservative? What was your thought process also?
That was the peak of 2021, so I wasn't more aggressive. But I've been holding on a lot of crypto since going back to 2017, 2018. You know, I had my bags and just been DCing them. In 2021, beginning of the year, mid-year, I did buy more. Just been overall DCAing into what I had. Sometimes dollar cost average, not down, but sometimes on the way up. But you know, after we peaked, it's just, you know, there was a lot of stuff said in November, December, but I don't think anyone really anticipated how fast and how long this downtrend has been. Because we have seen data, we have seen Bitcoin fall before, right? And we have seen throughout times, you know, even though Bitcoin dips down, you'll see it come right back up, or at least there's relief rallies. This time is prolonged. We pretty much had 7 straight months of downs. So it's, in a way, it's something that we haven't seen before, but on a grand scheme of things, I have lived through many 70%, 80% dips. And one thing that kept me going was the fact that previous times I would try to outsmart the market. A lot of times I would try to outsmart the market, thinking, okay, I'll sell now and buy back in later, something like that. Has never worked out. Based on my experience, like I said, holding and taking advantage of the dips and not panicking, focus on the future. Those are things that I've learned over the years, and that's what I continue to do. So as we went lower from November, again, I said, no one knows where bottom is. So I just started DCAing and more aggressively as the prices got lower. So obviously around 17, 20,000, which wasn't too far off like a month ago. Been putting a lot more money into the market, and that's just how I've been doing it. Oh, another thing I didn't mention is something that I learned from previous past is to make sure you have cash on the side. I think a lot of investors, they tend to go all in and that's it. They have no more money on the side. So they get frustrated when things come down and they can't buy anymore. That's something that I've learned. So I made sure I had a lot of cash on the side so that I'm able to dollar cost average and bring my cost down, you know, as the market went down.
When you talk about cash on the side, you're talking about stable coins, or you're talking about fiat that you're ready to deploy and transfer into crypto should the markets dip?
It's both. It doesn't really matter. It could be stable coins. It could be dollars. It could be fiat. Whatever that is, you know, whatever that you could use to buy crypto, basically. And yes, both. I had a good amount saved up in case of a rainy day, and you know, I've been using that to be dollar cost averaging over this last 8 months or so.
Are you somehow mechanical on that? Like you have certain percentages? Oh, I have to maintain this much cash, and when I deploy, I'll just take X% off of that first, then another X% off of that, or is it mainly gut feel depending on, oh, it's a large drop, I'll take a larger portion of it out first?
Kind of my gut feel at this point. You know, for many people, they can't do that because if they're following their gut, they'll just sell off everything immediately because they're too fearful. So I would suggest this to normal investors that want to take profits or just take cash out. Just to follow a schedule that they could follow. You know, maybe when something goes up by 20 or 30%, you could take a little bit off, right? And lock in the profits and also save that on the side so that you have that cash pile, right? You know, something like that. And this is a reverse. If something dips 10, 20%, you could also buy a little bit into dollar cost average. So you have to set a schedule, I think, both ways, and just be more disciplined about it. You almost want to like be disciplined like a robot. You take emotion out of it. But for me, since I'm more of a long-term investor and I plan on holding majority of what I have, I don't follow it as much. I just make sure that I have enough cash on the side. And for me these days, I try to stick with around 30% cash. And that's a combination of stable coins and fiat. So I just look at it that way. Hey, if I have about 30%, I could withstand pretty much any downturn that we have. It'll give me plenty of room to keep going. And that's how I look at it. So when things are down 20, 30, 40%, it just, again, to my gut, I'll buy a little bit, maybe more aggressive as the lower we go. But on the flip side, when things do come up, I will make sure that I keep that 30% and lock in profits in case there is another downturn. Well, first question, will Ethereum flip Bitcoin? At one point in time, I said no, it's impossible because Bitcoin is going to just keep getting bigger and bigger and bigger. At this point, I say it's definitely possible. I mean, Ethereum is only half of Bitcoin now. It's not even the third. Before it was like 1/4, 1/3. Now it's half. So can it continue to gain on Bitcoin? Sure. I think that's very, very possible.